Good morning and welcome to our final daily earnings season show of the week. And well, first up, I want to talk about American Express. It's reporting before the bell today, so it should be up shortly. American Express due to report earnings per share of $2.01 compared to $2.32 in the same quarter a year ago. So a fair drop in EPS there. Seen revenue is estimated at $11.37 billion against $10.47 billion in the same quarter a year ago. American Express is an important indicator of consumer spending, of course, in the US and globally, but particularly the US, and they are very sensitive to consumer trends. Nomura analysts saying that pointing out that credit card companies are not generally offering enough top-line growth to compensate for clients failing to make loan payments. And I think bearing in mind that we've seen auto loan delinquencies, that's i.e. people failing to keep up with the payments on their cars in the US, have started to trend a lot higher lately. So it is a concern that maybe consumers might just be looking a bit stretched, and that they are the reason that retail sales and so on continue and the growth is picking up still in the US is because of credit. Despite that, though, despite the cautiousness, Nomura is saying that they see relative value in AXP, that's American Express, which is more spend-centric and likely to outperform peers in the next credit cycle, they say. So American Express coming up, good bellwether stock, that one. The other big bellwether stock last night was Intel, whose shares jumped about 7-8% in after-hours trading after reporting better than expected fourth quarter earnings, extending a rally that's pushed it to a high not seen since the dot-com bubble in 2000. So Intel doing very well, seeing very strong demand for their chips and so on. Earnings came in at $1.52 against $1.25 expected on revenues of $20.2 billion versus $19.2 billion expected. Revenue rose 8% from a year earlier. And I think what we're seeing there with Intel is they're good. Again, chip makers these days are good leading indicators of global demand. So it's a good sign that Intel's doing well. They have been under pressure from AMD of late, but there has been good momentum in the stock, and that's continued with these results. And they're seeing, in particular, what you're seeing is very strong demand among data centers for the chips as consumers are and businesses are driving massive demand for data, cloud storage, whatever it happens to be. So data centers are key. They're seeing adjusted earnings of $1.30 a share and revenues of about $19 billion for the first quarter and $5 a share on revenues of $73.5 billion in 2020. So looking good there, a good outlook. But nevertheless, despite that, it's only 2% annual growth, which has some people saying it's maybe not as good as it could be. Intel Chief Executive Bob Swan was on the conference call, and he said that there's just not the visibility for the 2020 numbers that they would like. And of course, you do see cyclical slowdowns that can affect quarter-on-quarter numbers for PC sales, particularly PC sales, when momentum could shift downwards. In the last year, there's been a bit of a refresh cycle which might be slowing as Microsoft's Windows 10 operating system dries up in the second half. So great numbers from Intel. Outlook maybe not as 100% roses, some might have thought, but still looking pretty good. So Intel doing very well, and American Express seen posting decent numbers too. That's it for now. We will be back later for our final Walk on Wall Street of the week, and we'll see you then. Thanks for watching.